The National Investor's motto is, you can get information anywhere, but here you get knowledge. And for well over 40 years now, Chris Temple has imparted that knowledge, an unparalleled, understandable, and useful take on the big picture of the markets and of our world. He has been out in front of what you see on the news every day on many themes. More, Chris has taken this macro knowledge and his unique analytical abilities to uncover unique investment opportunities. Often, he has guided his members to big winners in resources, biotech stocks, and more. His talents and connections often getting him into ground floor opportunities before they are discovered. Without further ado, here is Chris with today's topic.
Welcome once again, Chris Temple here with you, and as promised some days back, I'm bringing back on our platform today my old friend Scott Melbye. Scott is, in today's context, the Executive Vice President of Uranium Energy Corporation. Uranium Energy Corporation, as you see here on the screen, is listed on the New York Stock Exchange, Amex or ARCA, goes by just synonymous terms, under the symbol UEC. As we're recording this, a slightly over $3 billion market cap, pure play U.S. uranium company. Indeed, I don't think that there's a uranium story of a producer or near-term producer that has got the beta going forward, as it's demonstrated in the last few years of uranium's first act, as I've called it, as does UEC. The company, under the tutelage of founder and CEO and director Amir Adnani, has done a great job in putting together a group of world-class assets in the uranium space, as you see here, buying a lot of these things for far less than what their perceived worth is today, now that we've started this uranium and nuclear energy bull market, not to mention what these assets could well be worth another 5 years down the road if things evolve as we think that they will. Now, all that said, before I bring Scott on, of course, he and or myself may be making what could be construed as forward-looking statements. And so we want to let you know about that. A lot of forecasts, predictions, and whatnot are made. Maybe Scott volunteers them. Maybe I ask about them. We, and primarily he, gives you his best assessment of things as they are today, since none of us has a tricked out DeLorean and knows the exact future that may be coming for us. Scott has been with Amir through pretty much all of this journey in putting together this group of assets. It's been a great story along the way that I've followed almost since the company started, not quite, but pretty darn close. And so I've seen the lean times, and I've seen Amir, despite that, persevere. And again, the great investor that he is, put together a group of world-class assets that really has, if you want to bet just on uranium, not looking at any of the technologies and utility aspects and so forth, this is the place you want to be, probably to the exclusion of any other company in North America, that I think is going to give you the biggest bang for your buck if we see another big wave higher for the uranium price, which Scott and I both think is in the cards, and probably sooner rather than later. Now, we're going to cover a lot of ground, a lot of developments for the company just this year. One more big acquisition still, their second big acquisition from the mining giant Rio Tinto. So Scott's going to give us a little bit of the background on that. And look, even though we're going to go through this in a methodical way, there's still an awful lot to uncover and unpackage here. So as I always remind folks, make sure that you do your own homework, spend some time, and here's their information on the screen. Go to UEC's website, read through all of their corporate presentation. We'll share bits and pieces of it here, along with some of the updated news. Follow them on social media. Follow yours truly, so that you're getting my video interviews on a variety of different companies, not just UEC, as they come out. And in that regard, of course, make sure, among other things, to not only make sure you're on my free email list, but also to like and follow this video, follow this YouTube channel, so that you're in the loop again for other things as they come about. And here once more is Scott Melbye, who's today is wearing the hat of the Executive Vice President of Uranium Energy Corporation. Welcome again, Scott.
Well, Chris, it's great to be with you.
And before you came on, I gave people a really quick rundown of UEC's history, but we'll put some meat on the bones and talk about more recently what's happened because 2024 has been a super busy year for you guys. A couple more big pieces of news, another big acquisition, and so forth. But take us back in your own words because you're going to do it a whole lot better than me and tell us real quick the Cliff Notes version of how Amir Adnani started this company at a very propitious time, as it turned out,
Yeah.
and put all the different pieces together.
Yeah, no, it's Amir's vision with UEC and URC, has really been one of embracing the downturns that are inevitable in commodity cycles. With uranium, we had the mother of all bear markets, close to 11, almost 12 years. But rather than kind of sit on our hands, and Amir really built UEC through acquisitions off the bottom of the market. And it's really been exciting. I mean, I've now in my 10th year with Amir, 41 years in the uranium industry, and having been with some of the largest uranium companies in the world, I have to say that this has been the most exciting time in my career because we've really built something. We've taken what was a small Texas uranium producer, and over the last 4 years, we've made over $1 billion in accretive acquisitions and uranium investments. That's more than quadrupled our licensed capacity and increased our resources now in North America to around 500 million pounds. Much of that within 1,500 miles of our now three processing plants, processing centers in the United States. So to be the fastest growing uranium company in the world over this period has been really exciting. And to become really the largest uranium producer in the United States by a number of measures at a time where it's so important. I mean, jurisdictions are everything now with the geopolitics that we're facing around the world. And to be in places like Texas, Wyoming, and Saskatchewan, I can't tell you how good that feels. And we're very excited about where the company has been, but now really where it's headed.
Now, that total 500 million pounds or so of uranium resources, does that make you second now to Cameco? Pretty much.
That's right. I think in terms of North American resources, we were kind of tied with NextGen, who have all their resources in one big world-class deposit at Arrow. Ours is more diversified, but I think with the Sweetwater acquisition, and 175 million of those pounds are still in the historic category, but we're already putting plans in place to convert those to SK 1,300 pounds in the new year. So, yeah, it's really been a vision. When uranium was trading at 10, 20, 30, $40 a pound in the spot market, uranium assets were selling at pretty attractive prices, and so we took advantage of that. And with the Uranium One, with UEX, with Roughrider, Sweetwater, it's really been a consistent theme. And it hasn't been just acquisition for the sake of acquisition. We're really building on that North American theme where we're producing and cash flowing, in the near term and immediately in the new year from ISR operations in the United States. And then by around the 2030 time period, we'll be hoping to bring on Roughrider in Saskatchewan, and we're going to be engaged in a feasibility study on that project in 2025 to really put some more fine details around what that looks like in the next 3 or 4 or 5 years.
Okay, we're going to go through most of them in a little bit more detail as we go along, just to give a nice update. And again, a lot of things that have happened just in 2024. But refresh our memories, Scott. I know you've told the story a million times. I've told it a few less times. But one of the acquisitions that you guys have made is of Uranium One, which is
Yeah.
rather infamous,
It
going
is.
back to the Clinton grifting family and how that has come full circle. Give us that quick
Yeah.
food chain.
Yeah, no, I mean, having worked at Uranium One and, until the time that the Russians completely took it over and I left there to join Amir, I always knew the importance of those US assets that Uranium One held. And it was just crazy that, the Obama and Clinton administration, had really allowed that to happen, to sell those energy assets in the Powder River Basin. But we were really thrilled to be able to repatriate those. We concluded a deal with Rosatom literally just months before the second invasion of Ukraine, and we're able to get it out of Russian hands, get it into an American company, and more importantly, now get it back into production. So again, I think the acquisition point there of, around 112, 115 million for those assets today would be, 5 times that price today, given where the uranium market is. So it was good on a national level to kick the Russians out of Wyoming for UEC, though it gave us our first mover in terms of production restarts, which we'll go into in more detail.
Yeah, that's important to note that you've got a lot of these assets that you guys were able to accumulate for a fraction of their value as we see it today, let alone what it may well be in the future based on our
Mhm.
discussion of several days ago on the broad dynamics and still very bullish underlying story for the uranium market and the uranium price. Tell us a little bit, Scott. I know you guys now with this latest acquisition from Rio Tinto have got three what you call hub and spoke operations, where you've got central processing facilities, but satellite little wells off of that. You started, is it Christensen Ranch was the first one that you put back into production?
That's right.
Yeah.
So with
So tell us, before we get into Christensen Ranch, though, Scott, what I want to do is for people out there who might be a bit of a novice, they hear mining in any context, and you think of a giant open pit in the ground or something like that. Tell us what ISR, which stands for in situ recovery,
yeah,
does
yeah,
that
no,
mean, and
it's
how does it work, and why is that uh, better than a lot of different kinds of mining practices?
well, it means everything to the US uranium industry right now. A lot of these sort of lower grade sandstone hosted ore bodies in the past, really at a time when the US led global production in 1980, a lot of these deposits were being mined by open pit or underground methods. And they just frankly, couldn't competing on conventional mining, so open pit underground mining of those sandstone hosted ores. But by coming back into those deposits and mining them by the ISR method, they're really a well-run ISR mine in the United States can be in the first or second cost quartile globally, can compete with the mines in Saskatchewan and frankly even Kazakhstan on an all-in sustaining cost basis. And the reason being is it doesn't take a lot of capex to build these mines. The opex is quite minimal, not a huge workforce. Environmentally, huge advantages. You don't have the ground disturbance or the mill tailings. So you're able to reclaim and turn, operations back to the landowners within 4 or 5 years. You won't even know we've been there. So huge advantages. I mean, the U.S. is still obviously mining from the higher grade conventional deposits in the Colorado Plateau, but that's really where the United States uranium industry today is competing globally with the higher grade deposits from the plateau and the ISR deposits in places like Texas and Wyoming.
So the ISR, just the mechanics of it, you essentially put a well in that goes
Yeah.
into the ground, and you're in a vernacular, I get you're flushing the uranium out. Is that
Yeah,
about
I mean,
right?
more or less, you're drilling wells into the sandstone. You're injecting a sodium bicarbonate solution, a Perrier water, which basically reverses the natural process that deposited the uranium there in the first place. So it goes, from a reduced state in the deposit in the sandstone, dissolved into solution, pumped to the surface, then run through an ion exchange satellite columns which are basically a big water softener, which allows the uranium to attach to resin beads in that process. Then the loaded resins can be shipped, in our case, 50 to 100 miles to our processing plants. But the economics of the loaded resins you could ship to 300 miles if you had to at that stage. And it's really at that point, you're shipping a very high value uranium, loaded on resin. You're not shipping ore over great distances. So it really does have, cost advantages that allow us to really compete. And I think, at the time of Fukushima, I think the ISR industry in the United States was really revving up, only to be cut short. And you see a lot of the mines that are restarting now in the United States were mines that were licensed, permitted, and built in that period. And now they're really going to get, their ability to demonstrate, what we can do. And so it's not surprising, some of the earliest movers in new mine production globally today is from ISR and from the United States.
Well, and again, it's fairly benign compared to what most people would consider being mining. So you talk about shipping those beads, and that those get shipped, of course, to one of your hubs. And
Yes.
you've got
Yeah.
three of those hub and spoke operations starting already, one and lined up otherwise. So give us a rundown through the three of those.
Yeah, that's this processing capacity is obviously critical. You can call it milling capacity if you want to use that term, but at Irigaray, we have a 4 million pound per year licensed facility there, and we're making modifications there to fully utilize that 4 million pound license. But at that stage, the loaded resins are stripped, eluted, precipitated, vacuum or run through filter press, vacuum dried, and drummed in yellow cake, produced and drummed and shipped out as a U3O8 product at that stage. So to have the central plant at Irigaray not only allows us to process resins from the Christensen Ranch well fields where we're currently producing, but then we have other licensed well fields in Wyoming at Ludeman, at Moore Ranch, and at Reno Creek. And so this is the ideal. We only need to construct satellite ion exchange facilities at the well fields. We don't have to reconstruct a central plant or a mill every time we move to a new deposit. And these deposits can be mined concurrently, so we can be feeding the mill from multiple satellites, and will in Wyoming.
So you figure that what would the amount of time be to get that up to that 4 million pound annual production capacity, Scott?
Yeah, so with the Christensen Ranch operations, we began operations in August. We've been shipping loaded resins. We're now turning to that stripping, precipitation, elution, drying, and drumming. And I think in any of these ISR operations, I think in the first 12 months, we really don't expect more than 500,000 pounds to be produced over that period until we kind of hit our stride. But for example, we've now increased the flow rates at Christensen Ranch from 3,000 gallons per minute to now 6,000, with additional header houses coming online, and that's how we get up to the 2 million pound annual rate at Christensen Ranch, for example. I think collectively in Texas and Wyoming, our goal is to get up to 5 to 6 million pounds of production by the end of this decade, so by 2030, and that'll be contributing 3 to 4 million pounds from Wyoming, and probably 2 million pounds out of Hobson, roughly, from those two facilities. Now, we also are incorporating the Sweetwater Mill, which is a conventional mill in the Great Divide Basin. It can process conventional ores, but we're also engaged in an engineering study to convert or modify that process to accept loaded resins, because we already have a number of deposits in the Great Divide Basin, which would now be unlocked with the processing capacity at Sweetwater. So Yeah, I think as we kind of get our arms around, we've just closed the transaction and we're performing those engineering studies. We have the ability to produce a lot more, should the market need it, which it appears that will need it. I think the only constraint, at that stage is personnel and drilling. So I don't think
Sure.
that leap can be overnight. But our experience in Wyoming's been great with the hiring. We're over 50 people, really qualified, experienced people, and that's in addition to the folks that we got with the Uranium One acquisition that had operated Christensen Ranch and Irigaray previously, produced several million pounds. So that's going well. We're having success in bringing additional drilling companies into the state. And then, of course, we're doing the same thing down in Texas with Burke Hollow, where we're completing the ion exchange facility there and finishing out the production area one, which will be the first area of production that feeds the Hobson plant that's south of San Antonio.
So Hobson is slated to be the second of your hubs that will be starting.
Yeah, and that plant also has a 4 million pound license capacity. So obviously we can grow into, as the market calls for it, we can certainly grow with those two facilities. And then Sweetwater, we'll have additional processing capacity in the Great Divide.
Now, tell us about, because that's a very recent development, of course, as you pointed out, and as I've shown on the screen here, that's a very recent acquisition from Rio Tinto. How did you come across those assets? Is that something you had your eye on, or did they become redundant to Rio, as often happens with the larger company, or what happened?
Yeah, we often get asked the question like, well, if if Roughrider and Sweetwater are so great, like why did Rio Tinto sell them? And
Yeah,
it's like, well, sometimes big companies, I think a diversified global company like Rio Tinto out of the London headquarters, they have various divisions that are competing for capital internally, and it could be iron ore, copper, lithium. I don't think they really had a uranium advocate like they had in some of those other divisions. But hey, their decision was our gain. We were able to do the Roughrider transaction, which, to buy an asset, for 175 million that was, traded hands last time, for 600 million in a bidding war between Cameco and Rio Tinto. We feel very fortunate to have that. And I think in that process, Rio Tinto is a kind of company where reputation is everything, and I think they will only deal with companies that have a regulatory reputation in the places that that they're going to operate. And I think they felt very comfortable with UEC's track record in the United States and our personnel up in Saskatchewan. So they felt comfortable doing that deal. So it was really only a natural that we followed on with the Sweetwater transaction, but there was a lot of competition for both of these assets. So I think we just had the best combination of stable hands to be able to take the project off their hands and attractive financial deals. I mean, a high degree of cash. The Roughrider was half cash, half shares. They took shares in UEC, but Sweetwater was all cash deal, which some of the other offers that were competing were contingent on financing or raising the capital.
well, and it's good that you guys are in a position to do that. And even after that acquisition, you've still got a pretty good cash balance, no debt,
Yeah.
with UEC, so you're in great shape going forward. So, what's the forecast, Scott, basically as far as when you would be able to retrofit that mill? Because that's not a common thing in the U.S. to have a conventional mill
Yeah,
process
it's not.
uranium.
Yeah, we'll find out. We're in the midst of that economic or engineering study, and they'll give us what we need to know there. But I don't think it's as complicated as it may sound. You're just introducing. Obviously, you don't have to grind and crush,
Right,
or we're introducing, uranium materials late in the process. So it's really just to modify the receiving of those and
right.
integrating into the circuit.
Okay, well, that's easy. Let's go back to Roughrider for a minute because that's another one that has got quite a storied history. This particular resource up in Canada, our mutual friend Dale Walster is
Yep.
credited for discovering that some years back. And like you said, there was a big battle once everybody knew how big that resource was. Cameco, which owns a lot more up there, would have liked to have had it, and Rio ended up with it, and now you've got it. That's a different animal than
Yeah,
your ISR projects.
this is conventional mining in the
Right.
Athabasca Basin. It's not, these aren't cheap mines to build, but have, ore grades that are, world class, 100 times the world average. So we wanted to get our arms around it in performing an economic study on Roughrider last year or this year. And the conclusions of that were quite profound. I mean, what we have with Roughrider is basically a project with $1 billion post tax MPV,
Wow.
internal rate of return of 40%, payback in 1.4, 1.5 years. And the life of mine average production is about 6.8 million pounds per year
Wow.
on about 61 million pounds mineable or recoverable. And that's at ore grades of 2.5%. So listen, if Roughrider was its own company, it would be maybe similar to Fission, right? And have a
Yeah.
market cap of 1.5 billion. And I think, we acquired for 140 million. I mean, that was, kind of probably what the analysts were carrying it in their valuations until now. And you see the analysts have now upgraded, their valuations on UEC to reflect that what we have here is really world class. And
Right.
now it's really to step forward with the more detailed feasibility study to really take this to the next step. And again, I mean, I don't think this is going to be in production before 2030, but
Sure.
in that 2030 timeframe onward, the world's in a very significant structural deficit, and it needs mines like this. It needs mines like Arrow at NextGen and others. If they don't materialize, I don't know where the uranium's going to come from because we've really got growth. As we've talked about recently, nuclear energy is on track to double over the, between now and 2045. There's many calls, to triple nuclear power by 2050.
Yeah.
So we're on that kind of trajectory, and we're playing catch up just to get, we have a 50 million pound deficit, now. Well, 2030 on, we need a lot of mines. And some of these are in parts of the world that are off limits to us
Yeah.
or have geopolitical concerns. So again, I think um, the focus and a real premium is going to be put on Canadian, Saskatchewan deposits and operations and US. I
Yeah.
think really, we're going to see these jurisdictions really grow in the coming years.
Yeah. We'll wind down after a great update and quick lap around everything, but a couple of questions. I don't know if this is still the situation out there. It clearly was with the larger asset like Sweetwater that you got from Rio, but are you guys still on the hunt at all? Or has
Yeah, I mean, I think, to be honest with you, I think we're in good shape for now. I mean, we've made these assets to really build on those themes of Texas, Wyoming, and Saskatchewan.
yeah,
The time to be acquisitive is when uranium's, 30, $40 a pound, not 70, 80. And so we think, we were able to acquire these for attractive prices. And I think now the focus for us is execute.
right.
It's produce have production in Wyoming this year and begin operations in South Texas in the second half of 2025 and really ramping those operations up to achieve their full potential in what should be an amazing market. Again, I think last time we spoke, we said, don't be kind of fooled by this head fake in the spot market. I mean, it's traded down around $71, $72 a pound today. That's alarming. but it's not really based on fundamental long term. It's a lot of trader kind of distress selling by traders that needed to lighten their positions. Honestly, I think when we get into the first quarter of 2025, a lot of the traders that were selling to lighten their positions will be buying to build up their long positions in the new year. And we certainly know there's a lot of utilities, producers, and others that need to buy in the new year. So I think just like the equities being a real value where they're trading right now, spot market uranium in the low 70s is a real value. And I think you'll
Yeah.
see strategic buyers. This is a wonderful opportunity to pick up uranium at prices we won't see again for a decade.
Probably not, no.
Yeah.
So you're looking to get going in Texas also the second half of next year. What do you anticipate, if you can even give us a number, that your annualized production is going to be by the time we get to the end of 2025, which is only 12 months?
Yeah, so we haven't guided production, but at Irrigary Christensen Ranch, by the end of next year, we'll be operating at a 1 million pound per year rate. And that's with the additional header houses that,
Okay,
we're producing from the existing well fields and bring on the additional header houses. So we'll be up at, reaching that 1 million pound a year rate by the end of next year. Burke Hollow will be in that startup, which is very similar to the phase we're in right now at
right,
Christensen Ranch. Typically, these don't produce more than 500,000 pounds in the first 12 months when you've got to energize the well fields by injecting the sodium bicarbonate,
yep,
getting that saturation in the ore body. And it's a gradual process to get up to steady state. It's a little bit different than starting a conventional mine where
right. Gotcha.
start drilling, blasting, mucking, crushing, milling, and we're much more of a ramp up to the steady state.
Like when I see my daughter making sourdough bread, she puts a few simple ingredients in there, but you got to let it percolate.
Yeah, exactly. It's very
Yeah,
similar.
before it goes. But you said earlier that you figure by the end of this decade, you're going to be up with the U.S. assets around that 6 million or so pound a year.
Yeah, I mean, we want to be at
Uh,
5 to 6 million. We have the variability to go slower or go faster. I mean, that doesn't fully utilize all of our capacity, but I think that's a reasonable forecast given where we are today, because there are, you do have to deal with workforce and drillers and everything else, but we have visibility to those kind of production levels by
okay.
2030.
And one more important part of it before we close, Scott, is that you guys have worn on your sleeve that you're an up and coming producer after having a lot of assets that were shut in during the bad times. Now you're bringing them on, but you're unhedged essentially.
Yeah.
So you've got full runway and a lot of upside to whatever the resurgence in uranium is going to be when we start this, what I called Act Two of the uranium bull market. How do you see your strategy evolving to best monetize this increasing production? At some point, you're going to see us, you're going to have to make some kind of longer term deals with utilities. Do you want to try and stay with the spot market, or is that something that'll be determined as we go along?
Yeah, no, I mean, we clearly made a conscious effort not to kind of pre-sell these deposits. I mean, if we would have done that over the last 4 or 5 years, we would be selling at prices significantly below the current and expected market prices. That's just the name of the game. To get a contract with a utility, you have to give something to get something, and that means ceiling prices or base or fixed prices and flexibilities. So we've been happy not to go down that route. We want to be fully indexed to the spot price. We want prices that represent the next 5 years, not the past 5 years. And that will take all sorts of different forms. I mean, it can be spot sales in the market. It can be through agreements that we've struck with utilities to do one-off spot transactions with them under master agreements that are in place. We've signed contracts with utilities to sell forward to them, say a year out at market-related pricing, no ceilings, but just kind of much more of a shorter term horizon, rather than locking up 10 years, not knowing what the future will bring. We have a lot of these, with 41 years of uranium experience, I've got a wealth of contacts, connections. We can sell uranium to utilities, traders, producers, financial players, Sprott, and have sold to all of those. So we think it's the right approach. We may get to a point, I mean, if we're producing 6 and 7 million pounds in Saskatchewan and 6 million pounds in the United States, we're then getting to the size of a producer where we might need to have more of these market related contracts in place, just because of the size of the company we've become at that point. But now with production, in the 1, 2, 3, 4 million pound annual range, that's very manageable and the flexibility, to sell when we want to sell, not when the contract counterparty wants you to deliver, is something we really relish that. And I think it will result in one of the highest average selling prices of any producer in the business as a result. As an investor, I think that's something that you want to see. And it also has made us, in the fact that all of our production is unhedged and is ahead of us, has also made us a very interesting strategic target, I think, for those that need a lot of uranium in the coming years. They see a lot of uranium that can be produced at UEC's operations. So I think that's a great place for us to be positioned for our investors at this point in the cycle.
For sure. Well done, well described. Well, Scott, have a great last few days of 2024. We're time to throttle down a little bit. So Merry Christmas. Have a great break, such as it is. And I know things are going to start hot and heavy again early in the new year, and I'll look forward to keeping up with you.
Great. Well, it's going to be an amazing year for uranium investors. 2025 is going to be a banner year. So we're looking forward to what the new year brings. Thanks,
And
Chris.
folks, don't forget, and I'll put them on the screen here one more time. Make sure that you keep up with UEC and their news, their website, follow them on social media, etc. And then last but not least, yours truly here. If you're not already on my email list, make sure you are. If you haven't already liked this video, make sure you do that as well. And don't go too far, because I fully agree with Scott, what he said earlier, that we're going to see a pretty nice rebound sooner rather than later, early in the new year. And frankly, this is one of the commodities, if not the best story among commodities, that is going to be hurt the least if we see any economic weakness or market weakness and so forth. These dynamics are not going to change. So, Scott, take care.
For much more of the National Investor's cutting-edge content and actionable investment opportunities, make sure to subscribe to Chris's free content at nationalinvestor.com. And don't forget to like this video and subscribe to this channel too. Thanks for tuning in, and we'll see you next time.